This video is for information and educational purposes only. It is not financial advice. Please do your own research or consult your advisor before taking any trades. Spike in foreign investor, FII, equity outflows. Persistent FPI selling continues to weigh heavily. On the day, negative net flows from foreign portfolio investors added direct selling pressure. This kind of outflow tends to exacerbate declines because supply pressure meets weaker domestic demand. US H-1B visa policy shocks, regulatory risk for Indian IT firms. The US introduced a steep increase in visa fees on new H-1B applications, a $100,000 fee, which rattled investor confidence in companies exposed to US IT business. The IT index underperformed, dragging the broader index. Even if the policy clarification later said it's only for new applications, the initial reaction triggered fears and uncertainty. Technical breakdown, support breach around key levels. The Nifty slipped below the 25,000 mark, that is a psychological and technical support zone. Once that support was broken, technical sellers, stop losses, and trend-following funds may have added to the downside momentum. Market has reversed more than 50% of its prior rally, signaling that bears are holding fort in this phase. Weak global cues, rising US rate fears, dollar strength. Global markets are jittery on the outlook for US interest rates, which makes emerging markets, like India, more vulnerable to capital outflow. Dollar strength or weakness in rupee can put additional pressure on equity valuations, especially for sectors dependent on imports or foreign funding. If market is range-bound, levels to watch, 24,900 to 25,100, yesterday's broken support plus psychological mark. Strategy: buy near 24,900 to 24,950 with strict SL below 24,850 for a 50 to 80 PTS bounce. Sell near 25,080 to 25,120 with SL above 25,180 for a dip back into the range. If market breaks out, upside, trigger, sustained move above 25,200 with volume. Plan: go long on Nifty futures, CE, 25,200 to 25,300 CE, target 25,400 to 25,500. Focus on Bank Nifty and large cap banks, they attract buying when FIIs return. Trail SL tightly, global cues are still shaky. If market breaks down, downside, trigger, break below 24,850. Plan: short Nifty futures, buy 24,800p, or next OTM put. First target 24,650, extended target 24,500. It and mid-caps may lead the fall, focus shorts there. Avoid counter-trend longs until market stabilizes. If you find this content useful, support the channel by hitting subscribe and stay updated with daily market insights.